Welcome back to the Value Investors Club. I'm your host, Simon Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have Alpha Pro Tech Limited. Ticker is APT. Price at the point of filing is $4.31. Description: Alpha Pro Tech APT was written up on VIC in July 2021 at $6.99 per share. The stock quickly ran up over $10 before starting a steady decline. It has traded mostly flat between $4 and $5 since January 2022 and currently sits at $4.31. Trading slightly above net current asset value with a profitable business, hugely net cash balance sheet, and rational capital allocation strategy. I believe APT is undervalued with a well protected downside and meaningful potential upside. APT has two segments in its business, both of which are quite boring. The disposable protective apparel (DPA) segment manufactures and sells single-use protective products like face masks and shields, coveralls, bouffant caps, and boot covers. These products are manufactured in leased facilities in the US, Mexico, and India via JV and are sold through distributors mostly in the United States. DPA products are used primarily in clean rooms, industrial safety, manufacturing environments, hospitals, laboratories, and dental offices. DPA sales have been relatively stable over time, with occasional sharp increases during periods of viral outbreak, such as SARS in 2003, H1N1 in 2009, and COVID 19 in 2020. The economy and general industrial manufacturing in the US also impacted demand for DPA products. The building supply products BSP segment manufactures and sells house wrap, roof underlay, window tape, and other woven materials used in the building of new homes. Manufacturing is done in the US and India, and products are sold primarily through distributors. The BSP segment was started from scratch in the mid 2000s and has grown at a 14% CAGR since 2007. It is cyclically tied to US home building, but has done better than the industry starting from a small base. Both the DPA and BSP segments face near term headwinds. Excess DPA supplies following the end of the pandemic will take time to burn off. However, non mask sales have been strong, which has dampened the blow to the DPA segment. Home building has slowed with rising interest rates. APT will likely continue to do better than the industry average as they are adding distributors and still make up only a tiny fraction of the market. Both segments sell products with lots of competition and minimal differentiation. Reliability and specialty features offer small opportunities for improvement, but these can be copied by others. For example, APT's roof underlay products feature high traction material with pre printed nail holes that make for safe and easy installation. These are nice features, and the higher upfront material cost is more than justified by gains in safety and efficiency. But competitors can come up with similar features given time and energy. While APT is a respectable brand with a multi decade history of profitability, it is not an outstanding business. Average RE is in the high single digits. Demand fluctuates with domestic industrial activity, viral outbreak, and new home building, and supply is full of worthy competitors and substitutes. This isn't a franchise business, but it isn't a cigar butt either. APT has a market cap of 56 million and enterprise value of 32 million. Trailing sales, EBIT, and NOPAT are 62, 4.7, and 3.7 million respectively. EV per sales is 0.52x, EV EBIT is 6.8x, and EV NOPAT is 8.6x. NCAV per share is $3.77, 1.14x, and a TBVPS is 4.8 $4.85 or 0.89x. APT looks cheap on all these metrics. The company uses all FCF to buy back stock regardless of the share price. As such, diluted shares outstanding have declined from 27.1 million in 2006 to 12.9 million at present, 52% reduction. In the first 3 quarters of 2022, APT brought back 665,000 shares for $2.8 million. There's also an interesting element of optionality with APT. During prior periods of contagion, APT's operating results and stock price both increased dramatically. In 2003, SARS, face mask and shield sales grew 88%, and the stock went from 80 cents to $3. In 2009, H1N1 total sales grew 67%, and the stock went from 95 cents to well over $6. In 2020, COVID 19, sales were up 120%, and the stock went from $3.40 to nearly $20. The shares are now back down near 2019 levels, despite more cash and book value per share. I believe it is likely that the next period of viral outbreak will result in frenzied demand for APT shares, as has happened in all prior observable periods. To illustrate, if TBVPS grows at 8% for the next 15 years, at which point there's a viral outbreak and APT trades up to 3x TBV, the stock will sell for $46, 70% CAGR from the current price. The prior VIC write-up discussed APT's attractiveness as an acquisition target. The merits mentioned there still hold. I think private equity would be happy to buy this business, right size the balance sheet, and cut corporate costs, which are likely much too high at $5 million per share. A strategic acquirer like TVEC or Cardinal Health could also buy Alpha Protech and achieve some SG&A as well as manufacturing savings. The main risks are: number one, APT is a relatively mediocre business. Number two, the next outbreak could take a long time to materialize. And number three, when it comes, there may be less enthusiasm for APT shares than in prior periods. If any or all of these risks play out, shareholders could be stuck with a dead money kind of stock. Nevertheless, I believe downside is sufficiently low and potential upside sufficiently high. When you're unlikely to lose money, the other alternatives are usually pretty good. Catalyst, buybacks, viral outbreak, rebound in home building, and merger. Thank you very much for tuning in. See you next time, and please tell me what you think of this idea.